Consumer confidence in the United States just saw its biggest decline in over 3 years, as the ongoing struggle with the cost of living crisis is now being made worse by prospects for a weaker labor market. What's up, guys? I'm Nobody Special, and we got this one from the conference board this afternoon. U.S. consumer confidence fell in September. Consumer confidence weakened as consumers worry about jobs. It's not just inflation and the cost of living anymore. Now it's the labor market. People are worried they might lose their job, and it's starting to affect their spending habits. The Conference Board Consumer Confidence Index fell in September to 98.7. That is well below the 104 that the market was expecting, and it's down from an upwardly revised 105.6 in August. Consumer confidence dropped in September to near the bottom of the narrow range that has prevailed over the past 2 years, said Diana Peterson, chief economist at the Conference Board. September's decline was the largest since August of 2021, and all 5 components of the index deteriorated. Consumers' assessment of the current business conditions turned negative, while views of the current labor market situation softened further. Consumers were also more pessimistic about future labor market conditions and less positive about future business conditions and future income. So let's just go through a couple of the highlights from this report. First, the present situation. Consumers' assessments of current business condition turned negative in September. We had 18.8% of consumers said business conditions were good. That's lower than last month when 21.1% said they were good. And the number of people saying things were bad, well, that went up. It's now 20.2% versus 17.3% last month. So you can see fewer people optimistic, more people pessimistic. Consumers' appraisals of the labor market also deteriorated in September. 30.9% of consumers said jobs were plentiful. Now that's down from 32.7% in August. Now 18.3% of consumers said that jobs were hard to get, and that's up from 16.8%. Now, I would add here that you still have more people saying jobs are plentiful than people who are saying jobs are hard to get, but you can see both numbers are trending in the wrong direction. The labor market is weakening. And as people get more pessimistic in the present, their expectations for the future are getting worse as well. Expectations for the next 6 months here shows that consumers were less optimistic about the business conditions outlook in September. 18.5% of consumers expected conditions to improve. That's down from 19.1% in August, and 16.6% expect conditions to worsen, up from 14.5%. Now, once again, you can see we still have more people expecting things to improve than get worse, so you could look at it that way and say things are optimistic out there, but both numbers are trending in the wrong direction, so the market is clearly getting more pessimistic. And you can see in this chart here what that data looks like graphically. You can see the darker line there, that is the present situation index. And the lighter line in blue, that's the expectations index. Now, this index is a little unusual. It's keyed to 1985 when they first started collecting this data. So an index reading of 100 is exactly how things were in terms of optimism and expectations in 1985. Now, you can see here in the darker line, the present situation index is falling very fast. People are getting less and less optimistic about their current situation. And it's worth pointing out, though, the expectations index isn't changing very much, but it's also very low, stuck down here in the low 90s, high 80s. And as I mentioned in the introduction, it's the job market that's really weighing on people's expectations right now, and you can see it in this clip here from the report. Consumers' assessments of their income prospects are less optimistic in September. We've got 18% of consumers expected their income to increase. That's down from 18.6% in August, so fewer people are expecting a raise. And we've got 13% of people expect their incomes to decrease. That's up rather sharply from 11.7% last month. So you can see more people are expecting pay cuts, fewer people expecting raises. Although once again, the data is still skewed more favorably. More people are expecting raises than pay cuts. Although with what the cost of living has done in the last few years, can you blame them? Also included in the report today was how people feel about their family's current financial situation. The line up here in blue shows people who are optimistic or feeling good about their family's financial situation. The darker line there, that's people feeling bad. So as you can see what this chart is doing as these lines converge, we still have more people feeling good about their current situation. That's encouraging. But you see these lines are converging. Fewer people feeling good, more people feeling bad. And remember, guys, unemployment is still pretty low here at just 4.2%. So as the unemployment rate rises, expect to see these charts cross over and continue moving in opposite directions. And last but not least, we got this chart, the perceived likelihood that the U.S. enters a recession over the next 12 months. And you can see here more than 2/3 of respondents think the United States is heading into a recession in the next year. That number is up about 1% from last month, although you can see here it's still well below the highs that we saw last spring during the banking crisis when almost 73% of people expected the US to enter a recession. So long story short, people are still struggling with the higher cost of living over the last few years. That's resulting in them feeling worse about their family's financial situation or worse about the current business condition. At the same time, people are now starting to worry about their income security. Are they going to lose their jobs? Are they going to see a pay cut? And so that data combined has resulted in the biggest drop in consumer confidence that we've seen in 3 years. And remember, guys, the unemployment rate is still relatively low at 4.2%. So as the unemployment rate rises, you can expect that consumer confidence to fall further. And remember, almost 70% of US GDP comes from consumer spending, so this is a very important data set. Even though the stock market is making new highs day in and day out, consumer confidence is moving in the opposite direction, and sooner or later, the consumer always wins. Just makes up too big a share of that GDP. Till next time, live small and dream big.